Okay, so in this video I would be teaching you one of the easiest and most reliable ICT trading strategy. In this strategy we would be using 4-hour and 15-minute chart, and we would be using the terminologies fair value gap, market structure break, and 0.5 Fibonacci level. I hope you would be already aware of that, but let me just quickly remind you. The fair value gap is the gap between these candles which is left unfilled. See this gap and then this gap between the lower and the upper candle. This gap is the fair value gap, and the market structure break is where the market structure shifts, like a big red candle or a big green candle shifts the market to the upside or to the downside. Like here the market structure has shifted to the downside, and here the market structure has shifted to the upside. I hope you would be already aware of these terminologies. So in this strategy you open this chart on 4-hour and you see that the market structure has broken and the coin is pumping to the upside like this. Okay, so you saw this whole thing pumping from here to here. Now you want to enter, but you don't know where to enter this trade. So what you do is you wait for the market structure break to the downside. Like here the market structure has broken down by two consecutive big red candles on the 4-hour. Okay, now where would you enter the trade? So what you do is wait for this chart to go back to this 4-hour fair value gap. So once this chart goes back into the fair value gap, you would get yourself ready for an entry. But is going back to the 4-hour fair value gap enough for an entry? The answer is no. This is the point where your patience will be tested. What you will do here is switch to the 15-minute chart. This was the point where this entered into the fair value gap. Okay, so now you will wait for the market structure break to the upside. Like here the market structure broke to the upside. Now get yourself ready for an entry. So now the market structure has broken to the upside. What you will do is let this pump for a while, and then it will come back to this fair value gap on the 15-minute chart. Now is coming back to the 15-minute chart enough for an entry? No. What you would do here is draw a fib retracement from the bottom to the top, and you would use 0.5 fib level. Once the chart goes back to the 0.5 fib level, you would get an entry below this 0.5 fib level, anywhere below this. Okay, so this is the point of 0.5 fib level, and below it you can enter anywhere, and you would put your stop losses at this point, at the swing low of the 15-minute. See here. Okay, you would put your stop loss here and you have entered the chart here. See, it will pump. Now I'm showing you today's Bitcoin chart, and you see it's pumping already. So you can take profits at a swing high or a fair value gap, but today is CPI, so I would take my profits at this point, and then I will look for another entry. Okay, you can either take your profits here or at the fair value gap here. Okay, so let me just quickly summarize it for you. See, the market structure got broken here and it pumped to the upside. Then we waited for the market structure break to the downside. It went back to the fair value gap. Then the market structure broke to the upside, and we entered below 0.5 fib level here. Now we are going up.